Hey, what's up, everybody? So, about a week ago, I did a video on how Russia has been stockpiling gold for the past 10 years. And I said that this indicates that they might have been playing all along to do some sort of gold standard or gold-backed currency. I didn't really commit to that because it seemed far-fetched, but now I've looked at China and India's gold reserves too, and it seems that they all started stockpiling gold at pretty much the same times, right around 2009, and this is when Russia first invaded Georgia. This alone isn't enough to make me believe that these countries are conspiring to have a gold-backed currency system, but I heard a very, very interesting theory from one of the top macroeconomic experts in the world, Luke Gromen, and I'm going to show you a quick clip from him because he said something this week that absolutely blew my mind, and this sounds very possible. Now it's complicated, and I'll try to simplify it because it took me a minute to wrap my head around it, but just listen.
At that level, and that's why I say people underappreciate the leverage that the energy that Russia has as their real currency could be. What if Russia comes out and just says, listen, we and China have agreed that to get around sanctions, we are going to transact in, we're going to settle gold, or oil, in physical gold at a new ratio of 1,000 barrels per ounce of gold. And everyone is going to go, oh my God, this is a great arbitrage, right? I'm going to go buy 1,000 ounce.
So an arbitrage is just when you buy something in one market because you see that you can quickly sell it for more money in a different market. This happens all the time. Say you're trading on TD Ameritrade and then you see on another stock exchange that something's priced $1 cheaper. You know, big players will purchase like millions of dollars of something that they see mispriced by $1 and then, you know, sell it for $1 more. But this is much bigger than that. This is a monster arbitrage.
It's a COMEX gold or GLD. And then I'm going to convert it to physical, and then I'm going to take the physical over to Russia, and I'm going to get 1,000 barrels of oil, and then I'm going to sell the oil, and I'm going to get rich. And the market probably is going to shut down. It's going to crash instantly. The paper gold markets will just go, boop, F settle everybody, game over.
Right.
And then you're going to, the oil, the real value, is going to reprice gold. Again, I'm not saying that will happen. I think that's a long shot. If I was Putin and if I was pushed that far, that's what I would do. You can use the oil to revalue the gold to give you all the dollars you need, right? So, you know, maybe they end up sanctioning gold. That's very possible. He does this and they say, okay, gold, you know, you're a terrorist if you own gold, right? That's why I say it's the weak link is it's so levered. And there's so little physical gold there. It would take so little money. It's just nobody can do it unless, I mean, it is a...
Something that you might not know is that the gold and silver markets are famously manipulated and artificially suppressed because, to put it simply, the gold and silver markets are sort of what are supposed to keep governments and central banks in check because they rise in price when the supply of money increases. So it sort of rats out the government, showing that they are devaluing money. So, for example, the largest banks in the world often will have massive short positions on the silver and gold markets, which holds the price down. But what he is saying is that if Russia makes this proposition with pricing their oil and gold, it's a massive discount for that amount of oil. But since it would put a huge demand for people to grab as much physical as they could so they could exchange it for oil, but that demand on gold would make the price of gold go up immensely. And since Russia already holds a lot of gold, they would benefit from that. And even though they're selling a lot more value in oil for what the gold they'd be taking in, the amount that gold would go up would offset that.
It's an act of warfare. It's an act of political warfare. Now, you would basically be launching a new system at that point, right? It would be, you know, gold priced at whatever, you know, because really at that point, you think about it, if Russia and China, and I suspect the Saudis would probably go along with it. Certainly the Iranians, the Venezuelans would, which is a decent chunk of the oil market. Now the U.S. would be faced with a choice, right? If they say, hey, it's 1,000 barrels an ounce transacting between these parties. The U.S. can say, you know, yeah, gold is still 2,000 an ounce. Well, that means that oil's $2. The United States oil business is dead, right? Oil in the U.S. is too. You know, shale's gone. U.S. is now importing a bunch of oil, by the way, from Russia, who wants gold, right? Or exactly. Or our economy is dead, collapse, gas lines, riots, etc. Or the United States says, okay, oil's 100, gold's 100,000 an ounce, and now gold is the de facto primary reserve asset of the world.
A lot of people believe that gold should be closer, anywhere from between $10,000 to $100,000 an ounce, rather than $2,000 an ounce where it's at right now. This is simply based on the amount of money in the M2 money supply.
It's very much in a state of flux, but it all ties back to this point where this gold system is the Achilles heel, because it has been basically, it's this tiny little sliver of physical gold holding up this giant sort of inverted pyramid of paper claims on gold of unknown size. And the Jenga block at the bottom, if you will, is the little sliver of physical. And that little sliver of physical is nowhere near valued appropriately relative to the value of oil out there that Russia could deploy to just say, you know what, we're gonna pull the Jenga block out and let the whole paper facade come down. And then it's up to you, USA. What do you want to do? Do you want to be short oil? Or do you want to have gold be, devaluing the dollar?
This theory makes a lot of sense, and I think it's very possible, especially due to the fact that pretty much everybody knows that the price of gold is manipulated. This could really be a massive event that takes place if Russia wanted to do this. And like he said, the price of gold would undermine the dollar if it exploded like that. So some very interesting things might be around the corner. I'm not in the business of giving financial advice at all. I'm not a financial professional or anything like that. But I have been saying to my friends and family that I think it's a good time to be well diversified and not to be exclusively in dollars, to own things that cannot be duplicated. Like, it could be anything. Silver and gold are great. Cryptocurrency is good. Art is good. Rare baseball cards are good. There's a lot of ways you go. Even, like collector items, like rare cars. So yeah, whatever your thing is, if you want to be diversified and hedge against the dollar losing its value in a situation like this, that's something that's reasonable to think about. But like I said, that's not me giving you advice. That's just me telling you what's going on in my head. So I hope this was helpful, informative, and I will see you later.